Okay, great. I really love u-zyn's talk. I always sit there like a little child. I get super inspired about the ideas that he shares. I think sometimes you don't appreciate the fundamental idea that's there, and I think that concept of CDeFi is I love it. Yeah, it got me thinking actually quite a lot on that. So thanks so much for sharing that. What I would love to talk about in the next 45 minutes is, not sure yet. How is that moving? Is whether we're all gonna get rich until the end of the year or not. Obviously not. This is a disclaimer, no investment advice, no financial advice. What I want to share though over the next 45 minutes are just a couple of thoughts on what I see could impact the value of Bitcoin, Ethereum, DeFi Chain. I picked those three coins because I know on our platform these are the coins that most people are holding. And so, yeah, I want to talk about bullish factors. I want to talk about the bearish factors. I want to talk about black swans. So like things that could really crash everything. I want to talk about the really beautiful things and then give it a little bit of my personal probability on that. Obviously, you will have to make up your own mind on those various events. Maybe a show of hands. Where do you think we are in this entire cycle at the moment? Because obviously, winter or spring, this is kind of the question. Who thinks we are here at the very end now? So basically, this means we are in springtime, basically now coming up. So we are here, basically, and now we're seeing this entire run up. So this entire winter is over. Show of hands. Really? So few of you. Okay, at least some honest ones. Thank you. I appreciate that. Okay, great. Who thinks we're rather still here where people are really angry right now? Yeah, they're frustrated. They are in all of that. Show of hands. Okay, fair. Quite a few of you. And then who thinks we are like right now on this downtrend? So basically we're still full in winter and we should expect way lower prices until the end of the year. Show of hands. Okay, a bit fewer. Who thinks we're actually still here? So that means we see a bit of a trend up now. Show of hands. Okay, let's see. Okay, great. How did we get here? Well, u-zyn kind of hinted at it. I think the first quarter of the year was relatively without much events. Let's be honest. Prices trended down. People were a bit nonchalant. It really kind of started getting juicy in May with Terra really kind of screwing that part up, and that at the end had this massive cascade to an entire group of companies where one after the other went insolvent, and obviously there's now a lot of back and forth questions on how is this gonna keep going. And at the end, that was that entire kind of down spiral that we saw. I will address that a bit later as well again. The really sad part, right? It's really a bit of an unfortunate part for Singapore is that so many of these companies had some kind of registration here in Singapore. I mean, if you think about Terra Luna, you think about Three Arrows, Zipmex now, Vault, right? There are so many companies, even though they weren't really operating in Singapore, they had left or they did other things, there is this connection. And so when we're going to talk about possible, I don't want to say black swans, but possible things that maybe people don't really have on their radar, just think about what may have happened to MAS phones during this time. How many people called and said, hey, what's going on with you guys, right? So yeah, this could be a bit of a frustrating part. Then obviously we had the beginning of July, there was some hopium coming up with the SEC hopefully approving a Bitcoin spot ETF. I was very vocal that I was hoping this was not going to happen because this would have been another very, very bearish catalyst in my opinion. I made a lot of videos and presentations on why it was so bearish, and in my opinion, gladly we didn't get that spot ETF. Otherwise, I think we would be way lower even in prices. Not going into more details right now, but this is just my thought on all that. And so the entire kind of, month of June, if we kind of look at this, so the very first half of the year was one of the most bearish crypto times that we have ever experienced in a relatively short time. And this is actually not only the crypto markets, obviously all of that. got exacerbated by the traditional markets. What I want to share, maybe one quick story on all of that, is that I really think that our company actually wouldn't be here today had we not navigated the last, not only 6 months, but the last 3 years, I think with some really good decisions, but then also with some really great luck. I don't know how often u-zyn and I were actually approached by the companies that you've heard in the news, right? And I'm not going to mention the names here now because I don't want to, at the end, I think that's unfair also to these companies. We got approached by literally every single one. Doesn't matter if they're small or big, and they wanted to have some collaboration where we would lend them customer funds or where we would do some aggregation with them and so on. And it actually is it comes down to exactly that part that u-zyn had addressed, and it kind of ties in with this. When the times are so amazing, right, and you are offering your customers 7%, but you can show them, because you are the DeFi platform, and you can show them completely transparently how you're doing it. But then there's these other platforms who are offering their customers 15%, and you have companies come to you, they call you, not once, they call you constantly, they invite you out for parties and drinks and everything because it's so amazing. And you're like, and these companies are like, hey, why are you idiots only offering 7% to your customers when everyone else out there is offering 15%? We can show you how you can also offer 15%. And then our question was always, does this only work when times are good? Well, times are good. Crypto's only going up, right? Haven't you seen this? And we're talking about 2019, 2020, 2021. Crypto only knew one direction. And the other thing was, when we asked, can we actually see how you're making those returns? Well, sometimes we could, but it was impossible to somehow show this to the customer. Or it was with like, oh, this is a proprietary strategy. Like, we're not going to reveal that. You have to trust us. And I'm not kidding. I always think there's a lot of luck involved in these decisions because it was not only one. It was like one after the other, after the other, after the other, where we had to pick partners. You have to pick partners. And for example, one of our partners, they are now also MAS licensed here in Singapore, Sparrow, right? It was like, I don't know, it was so difficult to pick Sparrow over so many others. And there were some red flags on others that we didn't see in Sparrow. And there were question marks on Sparrow because they were relatively small at that point when we started working with them in 2019. And at the end, in literally every one of those decisions, we didn't always make the best decision, but we didn't make those really horrible decisions. And so this is quite incredible. If I reflect not only on the last 6 months, but I reflect over the entire last 3 years in our company. Also, for example, in building this really, really conservative treasury, I got criticized by our own team members, by our own employees who were like, dude, like all these other companies, they're so outperforming us because you, like weakling, grow a pair, invest in crypto. And we constantly sold our profits into dollars, right? And so at the end, this is always what it comes down to. Sometimes you don't know, was this luck? Was this great decision making? I hope it was great decision making, and I hope we can continue this going forward. But I just want to share this with you, how, well, sometimes the difference between success and failure is actually a super, super, super thin line. I literally know every single one of those companies that got into the news and I had them on my phone, WhatsApp, Telegram, or whatever, because they bombarded us for years to work with them, right? And it's absolutely, absolutely incredible. With one of those companies, we actually had a meeting just 2 weeks prior, and they assured us, collateralized everything, zero risk. 2 weeks later, they were insolvent, right? It's absolutely bonkers to just think about that. So crazy. And obviously, this entire thing was not only about the crypto markets. It got exacerbated by the general markets. Interest rates with the Fed, I think it's one of those things that we have seen over and over again. Just the latest announcement here in end of July, so it's just a couple of days ago. It's been one heck of a ride when it comes to all of that. Obviously, second quarter of the year, we had another negative GDP growth in the US. The question then is this a recession, yes or no? People are talking about this is not going to be only 2 months, this is going to go for the next 6 weeks, so, six quarters. So we have seen one heck of a ride. And then in July, for some crazy reason, stuff started to turn around. Yeah, lights also turn around. Nice moment. in July, these are earning numbers for the largest banks in the world. So income, net income, year over year, Citigroup, minus 27%, JP Morgan, minus 28%, Morgan Stanley, minus 29%, all the way down to Wells Fargo, minus 48%. What do you think happened in July to their stock prices? I mean, come on, these are year over year numbers. What are you expecting? Well, what happened was prices went up. The day they reported earnings, bank prices on average, this is Wells Fargo, this pink one, despite their earnings being down, their income being down 50%, their stock price went up 7%. And why is that? And that's a really important question. It is because over those 6 months, we went from complete disbelief at the very beginning, and it's like, this is not going to be so bad, it's not going to be so horrible, all the way down to June when it was like, this is the end of the world. Like now Bitcoin is going to go into the thousands. It's going to drop under 10,000. The S&P has another 20% to fall. What's the next protocol that's going to crash like Luna? And then suddenly, this all didn't happen. And suddenly, people all sat there and were like, oh, wow, is this the bottom now? Are we seeing this turnaround? Is this the time that we all kind of waited for? And not only the individual stocks, also Bitcoin in July had one of the strongest months in a very long time. The last time we had such a strong month, obviously it was one of the strongest months in the entire Bitcoin history, was October last year, when we were close to hitting that all-time high from that point. And just as always, as soon as there's some risk-on behavior coming in, the altcoins get even stronger. So in the month of July, when Bitcoin did about 17%, the altcoins rallied even stronger. And so obviously, that's where a lot of these emotions are coming from. So I'm quite impressed, actually, that very few of you picked that very tail end of where you think we are in this cycle. But maybe you're going to be surprised in where I think we're in this cycle. And then if we look at the entire year, everything is still down. We have gold still doing the best out of all of them, the S&P, tech stocks, NASDAQ, and then Bitcoin. Obviously, if we go into altcoins, they are even further down. And it's, I think, a really, really fair question. Where are we going from here? Are we seeing the continuation of this winter? Are we seeing spring? Are we seeing this turnaround? And obviously, predictions are very hard, especially if they are about the future. So what I'm going to try is not so much to make price predictions, but try to analyze that from a value perspective. We did this at the very beginning of this year. If you remember our very first talk, I'm going to build a bit on top of that, bring in some additional kind of ideas, and try to kind of put some salt into that. A couple of things I want to obviously highlight. 95 to 99% of all predictions are completely wrong. I think, what's the YouTube channel? Veritasium, you posted it, right, Ian? Veritasium posted this really good YouTube video about the 4 qualities of an expert, right? You did that, right? Yeah. So if you don't know the YouTube channel of Veritasium, I think it's a really, really great YouTube channel. Just posted a video, I think yesterday or 2 days ago, about the 4 qualities to be an expert or something. And one of those is how all the financial experts and all these forecasters are completely wrong all the time. Watch that video. It's a humongous large YouTube channel. I think 15 million followers. So watch the video. Again, I think especially in crypto, 99% of all predictions are completely bogus. There's always this kind of flip side. When stuff gets very, very bearish, people become overly bearish in crypto. And then when stuff becomes super bullish, they become overly bullish. And so this extreme is actually quite interesting from an investor standpoint, right? Because you actually want to find when investors who mostly invest in price become super bearish, and you actually spot that there's a turnaround in value, and you hit that sweet spot. And so it may actually be here at the moment. So we need to wonder or ask ourselves, has Bitcoin, has Ethereum, has DeFi Chain, or has any of your stocks, right? How has value changed in the month of July, or in the month of June, or over the last 3 months? What are people getting wrong from a value versus price perspective? Price is very easy to follow because it gets priced all the time. Value is very difficult, right? Value comes mainly from one thing, and that's the utility of something. It depends on how rare that utility is and how many people want that rare utility. So it's very, very difficult, and especially you have to actually think. And it's not as easy as just going on CoinMarketCap and reading a price. So let's try to do that. Let's try to think about what has changed in Bitcoin, what has changed in Ethereum, what has changed in DeFi Chain, and then think about, is it actually possible that we are actually really seeing a spring right now? Are we at the very bottom? Maybe this turnaround is completely justified, or maybe it's completely bogus, and we're actually at this very early dip up now, and afterwards, that's when the major crash is going to happen, because actually nothing changed. So let's try that. Let's start with utility. These are just my own guesstimations. I have no scientific data on how much purchase power actually is in Bitcoin for the three utilities that I see in Bitcoin. I have no scientific data. If you have scientific data, please share it with me. That's pure guesstimations. When I do these talks, I ask people to raise hands, and I just kind of watch and spot things. So a small amount of percentage in Bitcoin is actually for payments. I know that a lot of people always say that this is so great for payments, but actually very few people really buy Bitcoin to actually make a payment. What mostly happens is people just try to speculate on price, which is that last part, and then they just use it instead of selling it on an exchange. They just sell Bitcoin at a store. But at the end, they never really wanted to specifically use Bitcoin for a payment. So I would say it's a very tiny amount. I think a large amount of people are really those that say, you know what, I'm going to keep Bitcoin as this kind of credit default swap, if I want to call it a CDS, in case the entire world goes to shit, then I at least have something that cannot be taken away from me. It's this very special asset. It's kind of this schmuck insurance that people kind of call it. And so I do actually believe that this is probably a bit of a large amount. I still think it's a tiny amount. I still think probably 95% of all the purchase power, not people, purchase power, because that's what really matters, right? All the 95% of purchase power in Bitcoin is probably speculation. Hands down. I think, especially in the first world, super tiny amount of purchase power is actually in there for being digital gold. Majority just care about NGU numbers going up. Let's be real, right? And so now we need to ask ourselves, how has this changed? Do you think that people are more willing to go for like numbers going up? Do you think Bitcoin's payment rails has changed? I'm not talking about has Lightning improved. No, I'm really talking about, are goods and services priced actually in Bitcoin? Or are they priced in any other fiat currency, and then just at the point of sale, the fiat price gets converted into Bitcoin? Because being a unit of account, that's what really matters for the payment. Otherwise, any currency, Dogecoin or whatever, can be used as a form of payment. But it matters what's really priced in Bitcoin. Very few things. There's actually more things priced in this world in ETH than there are in Bitcoin. The entire NFT economy around Ethereum is priced in ETH. It's not priced in dollars. It's not possible to be priced in dollars because it's based on smart contracts. So it's priced on ETH. There's very few things that are actually priced in Bitcoin. So I'm not sure has this majorly changed over the last couple of months. I would say no. I would say probably people have started to really care about the schmuck insurance, about having some credit default swap on the entire world. I can see this. The question really is, how much risk on behavior of purchase power are we seeing in Bitcoin right now? Do you see a major change here? I'm not sure. Obviously, there's a little bit. I'm not sure, though, that is the main driver, that has been the main driver of that pump that we have seen in July. I just don't see that. That's my personal belief, right? I don't know, but that's what I think. So based on that utility, I haven't seen this change much. So the other question now becomes, okay, maybe something about Bitcoin being rarer or less rare has changed. So obviously, we know that Bitcoin gets issued per algo. We can be very sure that at least for the next couple of years, this issuance is not going to change. It's going to be a very interesting discussion once the mining rewards drop, and it's going to drop so much that miners don't have an incentive anymore to mine, and then suddenly the security actually drops. And then the major question that it's probably going to take 20 years, it's going to take until, and I know it is a very difficult topic at the moment in the Bitcoin community, but at some point that topic is going to come up. Is Bitcoin also going to switch to proof of stake because they figured out it's safe enough, or are they going to make a permanent inflation in Bitcoin? I know, not a topic you're allowed to touch today if you're a Bitcoin maximalist, but it's still 20 years down the line until this question becomes relevant. So until 2024, I wouldn't worry so much about it, and I would be very sure that until in the next 2 years, the issuance is pretty programmed, it's probably priced in, and then we're going to see this halving. So if all comes to fail with any kind of hype, I think there's a good chance that in 2024 we're going to see some hype simply because people are expecting a hype. So it doesn't even need that there's actually going to be a change in the rarity in 2024. It's more about the expectation of a hype that can create the hype. And so that's probably the fail-safe 2 years. Obviously, the biggest driver over the last 6 months, and that's the big question now in July, what changed, is the expansion or shrinking of the entire US dollar, the M2 money supply. Expansion meaning the Fed printing money, which it has done since 2008 in an aggressive manner over the past 2 years, 2020, 21, in a super aggressive manner. And the actual shrinking of the balance sheet, we've seen for the very first time in a long time, actually a shrinking in M2 money supply. The last time here was 2010, so Bitcoin here was pretty irrelevant, to be honest. I mean, at that point, I'm not sure Bitcoin cared about M2. It was completely, I think, completely irrelevant. And if we look in between, we have always seen a massively growing M2 balance. And even, I mean, that was during COVID. In order for the economic recovery, we have seen an M2 expansion as we have never seen before. So what changed here in July? What changed? I don't know. The big question is always, maybe the expectation of what could happen changed. So it's not so much that the status quo changed, it's the expectation that changed. You remember the example with the banks? The results were nightmarish. But because I had expected it to be nightmarish, I was actually positively surprised. It was not that nightmarish. We didn't see minus 80%, we only saw minus 50%. So that could be that exactly same scenario. We saw the Fed in July raising rates 0.75%, but they signaled, and now comes this very interesting kind of market expectation. They signaled that maybe this would peak around at the beginning of the year, and then next year, we're actually going to see a slow decline again of this interest rate. And so this pure expectation in July helped the markets to actually kind of have a bit of a relief rally. Just that expectation. And this actually is not only shown, it's actually a strong indication, in my opinion, this could actually be true, because also inflationary protected bonds, TIPS, generally these are bonds where you loan the government money, and you're not only going to get an interest rate on a pre-agreed basis, the government also puts inflation on top of it. So the higher inflation, the more attractive the interest rates. And so TIPS actually can be a very interesting point to gauge how well the entire market is actually judging the economy. And so what happened was, for a very long time, actually TIPS are in the positives again. So that means for quite a few years, so the last time this happened was actually 2017, and then it completely crashed because the Fed was really kind of ravaging left and right. So in 5 years again, it seems that inflationary protected bonds, TIPS, are returning a positive yield. And the reason it does that is because of this expectation that maybe what the Fed is doing right now could actually be correct. I'm not saying it is, but that's what these TIPS holders are then basically predicting. And so that prediction that suddenly started to jump here reflected into all the other markets. It reflected into this liquidity that suddenly went from bonds, which are the most liquid markets, most money in the entire financial markets, aside of real estate, and we're going to cover that as well, are in bonds. So the next part is traditional equity markets or traditional stocks, your Apples, your Teslas, and so on. And then obviously you know all these charts. Then we have precious metals, we have commodities, and then crypto is this super tiny part in comparison to the entire rest, right? And so this always kind of trickles down. So that expectation change, especially in July, I think is a very, very strong indicator that there's a fundamental change in value. The question is this sustainable or is it not sustainable? Because if now this expectation change is going to go around, be like, this was last month. Like last month we expected that the interest rate is going to go down again, but it's actually not. It's going to keep going up. You're going to see the exact reverse happening. Just this expectation without the Fed. And the next time the Fed is going to make an announcement is actually end of September. So we have 2 months of uncertainty. And this can be quite interesting over those summer months. And so the big last factor in all of that that's going to come in now are emotions. And these emotions can be, okay, this is way too large. I don't know why it does that. There's a bit of a display error here. So it doesn't mean bearish, bearish, bearish here, right? This was actually supposed to be bearish and bullish, so this is just a display error here. So there's these additional factors. Is there the other slide now? Okay. There are additional factors that are actually completely emotional that are going to cause this massive left and right of people's decision making. And so I just want to address a few that obviously can really sway the entire market super bullish or sway the entire market super bearish. And you need to keep them on the radar. Obviously, one is Taiwan or Ukraine escalating. So I'm not talking about what's already happening, what the market has priced in. It's the escalation of that. I don't know. I see some people on Twitter that just to me is brain dead when they say, oh, a World War III would be so great because Bitcoin would hit $500,000. I mean, first of all, like ever saying that war is great to me makes zero sense. But that logic also doesn't make sense. Hopefully, we never have to do that if-then scenario. But in a case of a World War III, we're not talking about one country. We're talking about the entire world. What's going to happen to your entire risk appetite? Do you really think you're going to go and flee into this uncertain thing called Bitcoin? Or do you just, I don't know, try to get the weapons and try to get away as far as possible and try to get the last piece of food? I'm telling you, you're not going to care much about Bitcoin. You're going to care about getting away from everyone. That's your main interest, right? So I don't know, like, who comes up with this brain dead statement, but seriously, it's just a lot of people who are like, oh, like, this conflict in Taiwan, this would be so fantastic now for the world, like World War III, and we would see how important Bitcoin is. I'm like, come on, like, no. So, incredible. Obviously, we're going to have COVID, monkeypox. Per se, these things wouldn't have much impact on Bitcoin. The question here really is, what's the reaction to those? Are we going to see an economic downturn? Are we going to see lockdowns again? Or are we going to see nothing? Are we going to see stimulus? Obviously, stimulus, same thing as 2020. Are we going to see lockdowns? We would have a further crash. We're going to have the midterm elections coming up in November in the US. Generally, the party that is in those elections wants to have a positive economy. And so they're going to try as good as possible lowering inflation, bringing asset prices up. So there is actually a very strong chance right now that over the next couple of months, we're going to see this rally, right? We could see a rally over the next couple of months. There's actually quite some interests aligned. We have two complete black swans that we always have to keep in mind. I think they're super unlikely. One is Tether implosion, and the other one is Satoshi suddenly popping up and saying, haha, I'm actually malicious, and now I'm going to screw you all. So biggest rug pull ever. I think super unlikely, but we always have to kind of admit that it's always there. Three things I just want to address that are many times very counterintuitive. A recession, right? So who knows if we're in a recession or not, can actually be very bullish for Bitcoin. Why? Purely because of expectation. Because people are expecting that the Fed is going to stimulate the economy. Maybe not now, but maybe in the future. And so that expectation, and that's exactly what we saw in July, right? So I just want to be very clear on why a recession. When people say, oh, now there's a recession, and like this means stocks are going to go down, and crypto is going to go down. There's this very counterintuitive scenario. It's actually way more likely in a recession that we're going to see stocks and crypto going up. Not because everyone is doing better, no, everyone is doing worse, but it's this expectation of easy money, of money printing, right? So you need to understand that. It's expectation. That's almost the expectation of an event in investing is almost the same as the actual event happening. There's a very tiny difference. Oh, I always make the same example. Imagine you would have a time traveler, or let's say you could time travel, and you would travel to, let's say, 1 year down the line, and you would know, like you would see that Bitcoin is at 50,000. Right now it's at 20,000. It's at 50,000. What would you do today? You would freaking buy Bitcoin because you know in a year it returned 150%. Well, now guess everyone would know that. What would happen? Well, the Bitcoin price today would almost hit 50,000. There would be a small discount based on the value of money over this year, but it would almost hit 50,000. So the expectation of an event is almost the same as the event. In investing, that's really, really important. If we see hyperinflation or deflation, super counterintuitive, what would happen out of today's standpoint? It's very important out of today's standpoint. We're not talking about traditionally, we're talking about today's standpoint. So hyperinflation would mean we would somehow see more money printing right now, and we would see a real issue with the supply chains. From everything that we have seen over the last year, a hyperinflationary scenario would actually be bearish for crypto, because people would really panic about their purchase power. And so what we have seen over the last year, because inflation is not hyperinflation, but it's high inflation, people feel prices are going up, rent's going up, food prices are going up, fuel is going up, travel prices, hotels, airlines, and so on. And suddenly people are like, oh no, I'm not going to invest in Bitcoin. It's way too volatile right now. I need to be sure that I'm just like surviving. The super counterintuitive is actually the other way around when there's deflation happening. Deflation by definition means prices are going down. So in theory, you would have to invest in dollars, in hard cash, or you would invest in bonds. But this could actually be very bullish. And here's why. And I've actually been stating this for a couple of times. I don't know if you're listening to our Tuesday Twitter Spaces. I have been talking about this, I think, 3 or 4 weeks ago, about why I actually think we're going to see massive deflation by the end of the year. And so it's very interesting. Elon Musk actually came out, this is end of July, and he says inflation may be trending down. He sees all their commodity prices going down. And so he actually sees at least lower inflation. So why would this actually, or why could this actually be bullish? Not only for crypto, but it could be, and that's super counterintuitive, it could be bullish for stocks, for bonds, and for crypto. Super weird when all those three actually move in tandem. But what moved in tandem over the first half of this year? Crypto, stocks, and bonds. All of them dropped. There was no protecting. The only protection was dollars or commodities in the first half of the year. And it's very difficult to do either of those bets. So why is that? It is because deflation is actually measured on prices that you need for your daily kind of things. So if the things of your daily needs, your food, your fuel, your flights, if all these things suddenly become cheaper, and suddenly you see the opposite effect of what we've seen over the last year, but now suddenly you see it the other way around. Suddenly you see, oh, my rent, man, went so much up here in Singapore. And now suddenly you're like, oh, rental prices are dropping. Oh, wow, like, oh, wow, I renegotiated. Like I was paying $3,000 for the last contract. Now it went down, it's $2,500. Oh man, fuel is now not $3 anymore. It's like going down to $2. And suddenly you would have more confidence again in your purchase power. And so it's super counterintuitive that a deflationary scenario could, in this very moment right now, actually be extremely bullish for prices like Bitcoin, stocks, and for bonds. Very, very counterintuitive at the moment. So very difficult to kind of navigate that if you follow traditional business advice, because in traditional business advice, the advice would be, if there's deflation, you invest in two things, in cash or in bonds, right? And if there's hyperinflation, what you would invest in is you would try to invest in commodities. And that's probably true, but it's not so true that suddenly stocks would have such an issue, but we have seen the stocks having real issues over the last 6 months. And it's just because people really panic and people really struggle. And so when we look at Bitcoin, right, we really can almost only analyze Bitcoin based on these macro events today. It's very difficult to actually say, oh, you know what, if Bitcoin does ABC, that's going to change everything. It's actually almost a macro play. And that is why I still think Bitcoin is this fantastic insurance, because there's very little inherent to Bitcoin today that's going to change Bitcoin massively over the next significant amount of time. I mean, what would really have to happen? What would have to happen for Bitcoin to suddenly be, poof, I'm doing the Terra Luna thing? I mean, I don't know. I mean, sure, we could discover an inflation bug, or sure, we could have some kind of issue. Sure, Satoshi could jump out and say, rug pull, but it's super unlikely, right? So it's really unlikely. So that is why I still always think, and that's also why, for example, in our company, the part that we have in our treasury in crypto, the majority of that is in Bitcoin. Not because we think it has the highest upside, actually we don't think that, but because we think it has the lowest downside. Because there's just so little that humans can screw up in that entire project, because it's just so established. If you look at private investors though, especially VC funds, are there any VC investors here? No? So if you ask VC investors, the two sweet spots that they enjoy investing in the most, they would never invest in public markets. And I would actually think Bitcoin is a public market. Why? Because all the information is known, it's very difficult to get an edge, And making your bets is very difficult. There's actually two sweet spots for early stage investors to make investments. The very first one is pre-product, because that is when you purely invest into the founder. You purely invest into 2 or 3 people delivering on a vision that hopefully returns 100x, right? That's kind of the dream idea here. In crypto, this is basically your example when you go and you invest into an ICO, you invest into a very early kind of thing. Obviously, when we talk about Bitcoin, Ethereum, or DeFi Chain, it just does really not apply to that. But there's a second great sweet spot for investors, and that is, there's a really good book around this from Scott Belsky. I can highly recommend you read this. It's called The Messy Middle. And the messy middle talks about transitioning from this early startup, right? Where, like, this early successful startup, which 99% of actually projects never reach. But they reach that stage, and now they need to go from being a startup, and now they need to clean up, they need to get more professional people in, they need to stop hiring generalists, and they need to get specialists in. So it's this, where there's this massive change from, I don't know, chaos, and you try to bring some structure in. And so why do people invest there? Because there's a lot of uncertainty. And so when you, for example, I can highly recommend you you listen to that talk from Vitalik in Paris, when he talks about the merge, and he talks about all the splurge and all these things, right? One statement in there is quite interesting, and it kind of depicts really clearly where he thinks Ethereum is. He thinks Ethereum is right away at the end of that messy middle, where he thinks we need to come out of that messy middle now, and we need to come into this stable infrastructure. And so when you invest in projects that are in this messy middle, obviously there is uncertainty that they get through this messy middle into becoming the super stable infrastructure, becoming Bitcoin. But when you pick these projects and you actually understand the problems they're trying to solve, then you can have massive upside in comparison to the downside. And so the reason I want to tell you this is because in my personal portfolio, I have almost no Bitcoin. And the reason I don't have much Bitcoin in my personal portfolio is because, first of all, we have it in the company portfolio, and I own close to half of that, so obviously I don't want to overexpose myself there. But even if we didn't have it in the company portfolio, I still wouldn't overexpose myself into Bitcoin right now, because I actually do believe that most of these other coins, for example, Ethereum, strongly correlate to Bitcoin. And we've seen this. Ethereum has actually completely outperformed Bitcoin in 2020 and 2021, like massive outperformance. And even now in the crash, Ethereum has outperformed Bitcoin. Most people don't like to hear this, and they always come up with reasons on why this is going to change. And it may. I'm not saying it may not. But it's like data always speaks for itself. And facts don't care about your opinions. They don't care about your feelings. They just stand there. And so if you believe that Bitcoin is going to do well, and you can analyze Ethereum, and you understand the major problem they're undergoing, and the major problem they're undergoing right now is obviously the merge, if they manage to execute that, the upside in Ethereum is a multiple higher than that in Bitcoin. Now, obviously, if they manage to actually do this. And so let me ask you a question, because that is really important for the decision making. Who is the single most important decision maker in deciding whether the proof of stake chain is going to be used, or if we're going to stay with proof of work? Who is the single most important decision maker in this? Let's see if one person in this room actually understands that. I would probably say, if I would ask this question on Twitter, 99.9% of the answers would be completely wrong. Who's the single most important decision maker in picking the chain? Which chain is going to win? Proof of stake or proof of work? Because obviously if the merge happens, right, so let's think this through. Let's say they're going to do the merge. Let's say the merge is successful. Let's say they tested all this. Then we still have, in theory, a proof of work chain, a mining chain that continues. And the miners all sit there and they'll be like, man, my job is done now. Like, what am I going to do? I'm going to switch to Ethereum Classic or what? So who actually says, yes, you guys are screwed, and proof of stake is the right chain? Who decides? Let's go. We're going to do this as a group. Who are the potentials? Who could decide? Vitalik could decide. It's unlikely that he would. Miners could decide, and they probably vote for a proof of work. Exchanges like Binance obviously are going to have a strong opinion.
Project owners.
Project owners, definitely. but they also get forked, right? I mean, they're on both chains, basically. Sorry? The users? Yeah. Unlikely. No one, no. It's actually going to be two firms. And it's going to be funny if they take an opposite decision. It's Circle and it's Tether. Those two. Because whatever chain they pick, the other chain has no collateral. Think about this. Not a single person, if you ask this on Twitter, like 99% of Ethereum investors. Imagine this, right? So just to show you how horrible people's decision-making in crypto is. Understand this fact. Circle and Tether decide which chain are the relevant one. Because they are backing the dollars in form of USDC and USDT in their bank accounts, hopefully, and your tokens on Ethereum should correspond to actual dollars. The tokens are going to get forked, and one fork has no backing, and the other fork has the backing. So think about the consequences. The consequences mean that I think there's about $50 billion in collateral in USDC and USDT on Ethereum. So all the DeFi projects on Ethereum that are on the wrong chain are worthless. Like from one instant to another, they're worthless. There's no more dollars. Right? So think about this. You hear on Twitter and social media about all these things, about who's going to decide and the miners are going to decide. Bullshit. That just shows how bad people's decision making is. Who really decides is Tether and Circle. Now, I want to be very clear from everything we have heard from the industry so far, and I spoke to two friends who are quite close and should know this, hopefully. It's very likely that Circle and Tether is not going to screw around here and is going to try to really kind of destroy the Ethereum ecosystem, and they're going to go with the proof of stake chain. I just want to show how, first of all, how sometimes decentralization hinges on something totally different than you might sometimes imagine, and how decisions actually, of course, of course there can be a bug in the code. Of course there can be issues. Sure. But the real matter is two companies. And if they say, no, we're going to stay with proof of work, man, like there can be 100 million Ethereum users, you're going to flunk around with worthless tokens because they're not backed by anything anymore suddenly. Right? So keep that in mind. Very, very important. Personally, I do think the merge is going to happen. Maybe it's not going to happen here September 19th or whatever. Maybe it's going to take another month, or maybe it's going to take 2 months. Maybe it's going to take a year. Who knows? But I still think it's going to be very likely. The other thing that I also believe is that they have tested this enough. Obviously, personal belief. I cannot prove that. I also believe that Tether and Circle are not going to screw around. So I'm quite confident that we're going to see an Ethereum merge this year. And I mean, the market agrees. The market has Ethereum outperforming Bitcoin for quite a while. Obviously, the roadmap beyond that, Ethereum 2.0, again, I would highly recommend listening to Vitalik's talk in Paris. It is actually quite understandable. So he actually really goes and I would say 90% of that is quite non-technical. And he talks about the merge and then the surge, the purge, the verge, and the splurge, and serious terms, right? And and talks about that roadmap and how he just says, and then after that, Ethereum should then be should stop to innovate, and or it should be very, very slow to innovate, similar like Bitcoin does today. And it's just very interesting that someone like him actually understands that. Very few people from a strategic kind of roadmap kind of standpoint understand that. Many people, they kind of gravitate naturally to these projects, right? Some of you naturally gravitate to chaos, to the adventure, to the high risk, high return. You naturally do this. You don't think about this. And others naturally gravitate to the other projects where there's no more issues, there's no problems, everything is solved, and you don't think about this part, right? But we as builders and we as strategic thinkers, we have to think this through. And we have to understand, okay, right now we have people who really appreciate that chaos and the adventure, and then we go through this messy middle, and in this messy middle we need this difficult time because you lose a few of those adventurous people because they're going to go for other projects that are also adventurous, and you need to start picking up people who are more the infrastructure, long-term process kind of people, right? And so it's this really difficult time. Every company goes through that, every project goes through that, every relationship goes through that, every hobby you start and then at some point you hopefully turn into something a bit more serious goes through that. Right? Otherwise, you either stop it or it fails. It's always the same thing. Yeah, and obviously a project that I'm heavily involved in, I'm a big fan of, I think has a great future, is just in the middle of that messy middle, I think. It is in this where it's all about cleaning up some of the past debt, solving the DUSD issue, making this a hybrid stablecoin. Obviously, this has been an ongoing discussion over the last, 2-3 months. It's all about bringing in new features, at the same time making it more stable, making it more decentralized, and I think that's obviously always a very challenging time, but a very exciting time, right? And so during this time, you see some people who were these adventurous people be like, oh man, it gets so boring, it gets so slow. I'm going to step away from that, right? I'm going to look for something else that's super exciting and where I can make 1,000% a year or something. And then you have other people who would actually be more of the infrastructure people, and they're like, oh man, there's so many issues, and this DUSD stuff, and this is not working. And so, but it's those people that understand that vision and that stick with it, they kind of win in that. And so one of the most exciting things when I think about DeFi chain is to see DeFi meta chain, which basically is this layer on top of DeFi chain, which is built around Bitcoin, and it brings DeFi to Bitcoin, and then suddenly you have this EVM layer that provides all these Ethereum capabilities to this entire base layer. And so these are all things that this project has to solve, is going to solve, and then it basically comes out on the other side. And so if we then now reflect, right, when is Ethereum going to do well? Well, it's going to do well. Bitcoin has to do well. I also don't understand the maxis who are against Bitcoin, who always wish that Bitcoin doesn't do well. I mean, this to me makes no sense, right? You're kind of cutting off the left hand, and just because you're the right hand, you think, I'm cutting off your left hand, and you're forgetting that's the same body. And the same is on obviously with Ethereum and with DeFi chain. So you need to have Bitcoin to perform well. And then you need to have the chain executing well, because they are in this messy middle, both chains. Ethereum way further down, DeFi chain at the very beginning. And then you need to have its use cases going well, right? So you need to have DeFi, the NFT space, the DAOs, all these things. If they provide real utility, that's when these chains are going to do extremely well. And I obviously believe that, otherwise I wouldn't have invested my personal money in that. But you have to make up your own mind on that. And then still, we're going to have some outside influence that I am going to finish with, and that we need to address. Obviously, one is going to be Singapore. How attractive is Singapore going to stay from a regulatory standpoint? We've seen Binance move out. Singapore has become stricter and stricter on regulation. And if you'd ask me today personally, I think at the moment, Singapore is overshooting slightly, while it has undershot maybe in the first couple of years, right? And so now, right now it's probably overshooting a bit, maybe righteously so, because we've just seen quite a massive hit here with a couple of companies. And so maybe Singapore just kind of has to really protect its reputation right now as a crypto hub. I do hope, and I mean, we as a company, we employ 140 people globally right now. I think about 80 to 90 are in Singapore. We have at the moment, really zero plans in moving. But obviously, this is something we are concerned about. We're watching. Because, I mean, this can completely make it unattractive to be a crypto company here. At the moment, hasn't changed. But I think that at the moment, Singapore cares more about the reputation as a hub, probably righteously so, and then hopefully soon, it's going to then counter-react a bit and says, okay, we protected our reputation, so now let's make it attractive again for businesses to really set up shop here. Because at the moment, it's definitely not the case. At the moment, there's so many other places that are way more attractive to start your crypto business. And that's a pity, right? Because I think Singapore would have this really great place. So let's hope this is going to change. Nevertheless, it's very, very difficult, despite all this hope that we actually see, to convince people that it's not as bad as it is. And we see pessimism at an absolute peak if we look back over the last 20 years. And that is because people still don't see inflation subsiding. They still see prices being super volatile, and they hear all these bad news. And so, obviously, I want to finish with some statistic or data to actually say, are they right? Are they right that we're going to see this winter? Or actually, are we going to see this spring now, despite all the substance and value that we have kind of discussed? Well, the first thing, that's in Bitcoin. Light blue is retail, and green are the whales. Whales have constantly been selling this year. So it hasn't stopped. So if you look at the large wallets from whales, they have constantly been selling, haven't started buying, haven't stopped selling. Retail, on the other hand, so the small investors, light blue, have constantly been buying. Now, to a certain extent, this is normal. It's normal that whales are gonna become fewer and fewer just because funds on Bitcoin are gonna get more diversified. But you do see a bit of a speeding up here at the very end in 2022. So the large money is not convinced that this is the bottom. They actually think it's not. And retail, on the other hand, especially in July, has been thinking this is the bottom, and now this is like the time to get rich. So let's look at some on-chain data, and that's the beauty of blockchain. We can see this. Obviously, Maya multiple is an average of the current trading price compared to a 200-day average. And so at the moment, this Maya multiple sits at around 0.6, so that means the 200-day average and the current price is at 60% of that. If the Maya multiple is that low, these are great times to invest. That's at least what, and this is the key, the past says. But we all know the past doesn't predict the future. So the last time we had these low Maya multiple values, this was the COVID event, this was the end of 2018, and this was the end of 2014. So there is some really weird kind of stuff happening. The last times we were that low, right, all fantastic buying opportunities. This was the end of the last kind of bear market, and this was the end of the 2014 bear market. So if you believe in the Maya multiple, it's fantastic times right now. But then we also know it's not that past prices make the future prices, it's the future that makes the future prices. And here we see, actually, we're getting now to a little bit of that, what I actually believe. If you remember that chart at the very beginning, I sadly actually believe we're still in this very dip on the very top there, where we've seen this dip down, and now we see a recovery, and now we're gonna see further down. The only question is, how long is this time now? I'm gonna give you my personal thoughts. Again, I'm probably totally wrong on this, but it's just a little bit of some thinking there. The reason why I doubt that we're gonna see a massive rally right now is just because we have seen so many coins cycle in the last couple of weeks that as soon as prices go up 20%, the traders are all gonna sell because they're gonna be so happy about 20% during times when it's like already difficult just to stay break even. And we see this with all the moving averages. It's so difficult to beat those moving averages. This was the 200 weekly moving average. We're just slightly above that in Bitcoin. And then we have like a 111-day moving average. We have the 200-day moving average. And they're all sitting, like the 200 sits at 35,000, the 111 sits at 30,000. And so you could say, yeah, but who cares about these moving averages? Yeah, I actually agree. I think the chart analysis is like hocus pocus. It's like astrology for people in crypto. But that doesn't still change that it provides some underlying emotions. And people are just gonna get immediately, they're like, oh, I bought at 20, now it's at 30, it's 33%. Oh, prices are slightly gonna go down. What do you think most people are gonna do? Panic, sell. And that's gonna cause the downturn again, right? So all these rallies are gonna be sold off, in my opinion, relatively quickly because of that. And that's just gonna take some time. It's gonna take some fundamental time. And even if we overlay past cycles with the current cycle. So you can see here, the green cycle is the 2014 cycle, the light blue is the 2018 cycle, and then the orange one is where we are right now. If you think it's over, right, then we will be insanely fast. And so far, these cycles actually lay over each other quite well. We will be insanely fast. So if we're turning around now, this will be fast. What I rather actually think is exactly what the past cycles did. It's a bit of a sideward movement, right? So it's a little bit of up and down. And I actually could easily see this. And then I could easily see that we're gonna see another leg down. The really difficult part here is this really gonna happen? When is it gonna happen? And these are things I'm not timing. I have no clue about that. So I use the time at the moment to dollar cost average into the market because I actually think this is a great time. But I'm not expecting that now we're gonna see a 100% rally. That would really, really surprise me. Positively, but it would surprise me. And maybe just to put a little bit of perspective in all of that, I think perspective is really good, right? If we're looking at where are we in all of this right now, right? In Bitcoin. Bitcoin is the orange dot. Here you see time, to the right you see time, down you see how much markets crashed. So you see the last two bear markets, they are still further down and they take about another year or something to really recover. So I'm just giving you this Not because I want you to get bearish. I'm not. I'm actually super, super optimistic now. I feel the worst is behind us, but I still think we could see something. And as long as you have the right expectation, the expectation is almost the same as the event, right? So you come in there with the right emotions, I think you're going to do well. Ethereum, right? Going to take quite long. Now, let me ask you, without looking at the chart, just gut feeling. Where do you think the stock market sits in comparison to the COVID crash? Do you think the stock market crashed further than it did in 2020? Do you think the stock market crashed less? Do you think it crashed about more? Who thinks we crashed about the same? Show of hands. Okay. Who thinks we crashed more? Show of hands. Who think we crashed less? Show of hands. Okay, we did crash less, right? So the COVID crash is down here, the S&P right here, right? So if we would turn around now and rally, we actually wouldn't have dipped as far down as COVID, and we would have recovered in about the same time. So just to put this into perspective, and it's always like when you go through hell, right? It feels super long, I understand, but the best thing is just always to keep walking. So looking at all of that, if we kind of, doesn't matter, we can look at peaks, we can look at lows, all the data at the moment doesn't predict. And again, it's the past, right? The past doesn't predict the future, but we can learn from it. None of the data right now would make it anywhere credible that we're going to see this turnaround. And I understand that any technical analysis, any blockchain analysis is going to tell you, but mega multiple, but realized price, but 200-week moving average, but the balance price on exchanges, but the delta, the difference between realized price and what we are, all of them super bullish, we're going to rally. That's what you saw in July. That doesn't mean we're going to see the next bull market. It just means we saw that rally. And so I would be just super careful when you listen to that. And if I just may, I'm definitely not a stock market expert, but I think there's some really interesting data that, and I'm a data person. I come from medicine. Medicine is all around data, right? And you base decisions on data. And so for me, that's, I don't know, supernatural. So if we really have a proper recession, a proper crash, I'm not the expert on that, but I understand if we do have that, I could just look at past data and all of them are way lower. So I need to sit here as an investor and be like, yeah, maybe we're going to see this turnaround, but I need to have this expectation that we're going to go lower. And this is just a bit of my fear that we're actually going to see this, and that's when people really panic. I really think if Bitcoin actually went now down to 16,000, that's when they really lose it. Because they were like, this is the end, like, this is it, we're turning around. And now we're going to go even lower, and people would just really lose it. And they would make these really, really bad decisions. And there was this really, I can't remember who made this really interesting tweet. They said, max pain from here on is not that we are like going down and then we turn around. Max pain is we're going from here to 30,000. And then people panic, they buy because they all missed the bottom. Then they buy. Now we drop to 15,000. They're like panicking, selling. Now the market turns around, goes up to 50,000. They're like missing the boat at 40,000, buying, and then bam, we drop to 10,000. That is max pain. And so I just thought this was really, really interesting, right? And so if we then ask, what is the stock market very likely going to do? Well, with such a crazy month of July, anyone who thinks the market's going to rally or is going to crash, I mean, I don't know if you see any kind of trend here. Sure, you can say, oh yeah, here it's all green in the following months. Yeah, but here it's all red in the following months. So it's so difficult. It's like playing roulette here where you're like, we had seen 4 reds in a row. Now it's definitely black. No, it's not. And so I just want to be clear. This is so far. Drop, 10% rally. Drop, 10% rally. Drop, 10% rally. Drop, 10% rally. Now, has this happened before? Well, let's look. This is the the .com crash. Crash, rally, crash, rally, crash, rally, crash, rally, crash, rally. You know what the problem is? The problem is people always sell after the crash and they buy after the rally. All the way down. What happened during the great financial crisis? Let's see. Oh no. Crash, rally, crash, rally. And look at the time, right? This took like 2 or 3 years. So don't get fooled by the market. It's so difficult with your emotions. There is, though, a very strong indication that we're going to see a rally right now. And we see a rally for not like a few days or a few weeks, but this could actually hold on, especially with the midterms. And this looks really, really good. I'm in this camp. So I'm in the camp that we're going to see the year in Bitcoin lower than at the beginning, but higher than we started the second half. So I would easily see Bitcoin maybe at 30,000 at the end of the year. That wouldn't surprise me at all, right? But I would be surprised if we see Bitcoin at 100,000. And I would also admit I would be quite surprised if we see Bitcoin at 15,000. There's one exception, and that's housing. So we killed stocks, we killed crypto, we're knocking at the real estate market, and especially the US real estate market. Singapore hasn't seen this at all so far. The Singapore real estate market still seems very, very healthy. The US market is a bit shaky now. So now we are actually starting to drop in new house sales. We are seeing a drop in sales prices. So obviously we're not nowhere low, but we're seeing the beginning of it, right? We're catching a bit of a cold on all this. And so the question becomes, is real estate going to kill everything? Is the Fed going to do a 180 and they try to raise rates and they can't, and then they're going to lower rates, and we're actually going to see this massive rally that everyone expects this year? And then there's people who say, you know what? We're just going to go back to 2020 prices because we're undoing the entire last 2 years. And so it's a fair question. I don't think it's the likely scenario, but I understand where we're all coming from. So I am bullish for the rest of the year. I think it's fantastic prices to dollar cost average in. I think these are horrible prices to go all in or start speculating or go in leverage. I think it's horrible to stand on the sidelines right now and just be like, you know what? It's going to go lower. It's going to go lower. Because you're going to be buying at 30. You're going to be selling at 15. You're going to be buying at 40, and you're going to be selling at 10. And that is what, at the end, getting rid of your emotions is really going to change. And so I do actually believe in the cryptocurrency space. Value has been going up. I do understand why people are starting to buy. I understand why you have to be cautious. And again, this is just my personal thoughts on this. Thank you so much. Are there any questions? Otherwise, we can just mingle a bit and have a chat. Yeah.
Thanks for sharing. What's your thoughts on the oil prices?
For oil prices, I'm really not. Again, I'm definitely not a stock expert. I'm not a commodity expert. I'm not the person to be able to answer that. Like, I can answer almost any question on crypto and various projects, but oil is.
I'm asking in relation to inflation because.
No. The reason why I think we're going to see deflation is just because we have seen such high prices a year ago, and prices have come down, that I just think we're going to note a deflation number. But I am not the person, I'm not good with oil prices, so I shouldn't make statements there. It's really unwarranted, yeah. Great, yeah, last one.
Do you think crypto will be regulated by commodities, the commodities exchange or the SEC?
The question is whether I think that either it's the commodity markets or the SEC in the US that's going to regulate crypto. I'm not the legal expert, but from everything that I see right now, it doesn't look like it's going to be the SEC. It seems that it's being taken a bit away, unless it's a very clear security, then it seems to be regulated by the SEC. But Bitcoin and probably Ethereum, even though it hasn't specifically said Ethereum, but I think those two right now should be fairly certain be regulated by commodity, by the CFTC so far, from everything that I've read. But again, I'm definitely not a US securities lawyer. So, great. Have a nice evening. Thank you so much. I hope you join us next time again. We're going to do this every 6 or 8 weeks. And if you have still some questions, I think, we still have some time, then happy to mingle, happy to change. Thank you.